So let's begin with what we learned from 2024. Feroze, what did you make of the trends that you saw?
Yes, I think there were some really good trends which can be picked up. The one thing which definitely stands out is the net flow in thematic schemes was exceptionally large. It was almost about 1,40,000 crores of net flow in thematic and sectoral funds, of which 55,000 was NFOs. Is it very healthy? We did a study. If someone were to buy the top 3 asset management companies, all NFOs launched for the last 5 years, would they beat Nifty? The good part is they have beaten Nifty. All the NFOs of the top 3 AMCs. Now let's assume SBI is the top AMC in terms of assets under management. It has launched some tens, 2, 25, 27. If you bought, let's assume 1 lakh rupee in each of them, SBI ने launch कर दिया, मैं खरीद रहा हूँ. If this was the decision made, would that beat Nifty or not at a transaction level? The answer is yes, by about 4% per annum. So when NFOs have been used to expand the industry, it used to worry me. After seeing this data, I'm not so anxious.
Good.
So to answer your pointed question, this is the theme. Thematic and sectoral funds have got a lot of money in it. Second is NFOs have been the theme, but it's not been scary because mathematically it has expanded the industry, got so many new investors, and they've beaten Nifty. I think that's one very important hygiene check for having invested through a mutual fund. That's one trend. The second trend is that the SIP numbers are a reasonable barometer of India doing 2 things. Now, if I see that in conjunction with derivative trading. So, because we meet a lot of people on ground, I've done a small little study. When I was in 5 such events, I asked people, how many of you invest in SIP? And I also asked them the question, do you do derivatives? And we found 73% intersection.
Oh.
Okay, this is something which calmed my nerves again, because it's not 2 different people. They are trying to use the derivative space to quench the thirst of the adrenal. At the same time, they're not disrespecting discipline. If it was 2 mutually exclusive sets, the regulator had a bigger problem.
In terms of all the major NFOs that we saw this year, on the thematic side, on the sectoral side, or even other NFOs, there were so many NFOs. Which are the ones that pass muster with you and the ones that perhaps you think are fit to invest in even now?
See, I think our top AMCs launch certain themes at the right time. Okay, I definitely don't subscribe to a thematic or a sectoral fund. In fact, in my model portfolio for the last 11 years, I've not seen one. Only one we've just included, which is SBI Infrastructure. Okay, but coming back to NFOs, I think the energy sector NFOs were timed beautifully, especially the SBI's energy sector fund. HDFC's infrastructure fund was timed not in this calendar year, the year which went by, but that was timed very well. The manufacturing sector NFO of HDFC was also timed very well. So these large AMCs, when they've picked up themes, they've been very, very responsible is what I would say. The second thing is, why are suddenly so many NFOs, 32 NFOs and 55,000 crores? It is a resultant outcome of something which is a 2018 phenomena. When SEBI said that now you can't have any number of funds in the same category, so every large asset management company has its bouquet full with the flowers which are there. Now, thematic and sector creates an unlimited canvas. After 10 years also, you can keep launching thematics because the theme could be companies starting with the alphabet A. Could be a theme. So thematic gives you a very, very open canvas. And since everybody has finished their NFOs, that's why this is happening. So I personally think that I think I have to give some degree of credit to the large AMCs when they have launched sector or thematic schemes. They have timed them impeccably.
Feroze, do you still feel that this is a market where it is actually active funds that make more sense? And if at all one wants to dabble with passive funds, what are the questions that we should ask as investors?
It's a myth that passive is simple. Okay, it's a myth, and I'll substantiate that with some data. One is 84% of the total passive universe of AUM is between Nifty and Sensex. So the tail might be long in terms of the number, but the money is concentrated, like Kaustubh Saab said. It's in Nifty and Sensex. Point 1. Point 2, you have to understand that how are indices created in India? Apart from these factor investing, they are created on a growth style only. Larger the performance, Higher the weight, higher the weight, higher the inflow, higher the performance. So it is like when you have a child, wo chabi ki gudiya hoti hai na. I'm giving a very correlatable analogy, but a child's analogy. It's like winding a toy. What has happened in the US? Why are these businesses obscenely valued? Because they are top heavy. They're top heavy. If you're making a passive investing, please remember you are saying valuation is irrelevant. Because you are not in a passive index, you're going to be only chasing momentum, at least the way Indian indices, conventional ones, are created. That's one problem. See, Nifty 50, the top 5 stocks have about 38, 39%.
Sure.
If they underperform,
then
their weight will come down.
Underperform.
The weights will come down in the index. There are 2 review periods of NSE, which is 31st Jan and 31st July. People don't even know that, when there is a rejig. NSE 500. Now, the second problem is NSE 500, the smallest stock, free float, is not even 3,000 crores. So people might say it's great to invest in NSE 500, but that's the most academic index. India has 60 lakh crores of mutual fund AUM, 41 lakh crore of equity AUM. Hypothetically, if India decided tomorrow morning, let's move all passive, hypothetically, of course, you won't believe you don't have stock. Because the stock is only 2,400 crores. The amount which it needs to buy, this is a study which completely told us that if you go passive as a country, your supply isn't there to absorb that kind of. And we did a study of which stocks are benefiting from this trend and which stocks actually have a problem with this trend. And that was a very interesting analysis.
So now is the hottest part. What viewers really want to know, gentlemen, in terms of, what to do, are the funds to track, the fund managers to track. So, Feroze, I'm going to come to you first. Let's start by setting some house rules, in place, some ground rules in terms of how we need to evaluate and look at our equity fund portfolio as this new year kicks in. So, let's start with the basics.
Yes, Surabhi, I think that's very important. If you're choosing a scheme, first you have to choose a category. Before you choose the category, you have to choose the asset class. So markets become a fundamental pillar or a building block of a mutual fund portfolio. Now, markets are into 3 parts. We look at it like this, right or wrong, I don't know. Short term, there is a separate barometer. For medium term, market earnings or stock earnings or company earnings will decide medium term, and economy will determine the long term market trend. If you look at the short term barometers, we look at 5 short term barometers, which tells us whether it's time to be very scared or not be too scared. Should we put lump sum or STP? That short-term barometers help us get some clarity. There I would say we are 8 on 10 even on short-term barometers. Out of the 5 barometers, 4 of my barometers are showing that market is not going to show a catastrophic fall. Okay, we can go completely wrong, but that's what it shows. Perhaps we might be right. Now coming to the earnings bit. The perception of earnings being bad is very high. When I'm looking at people, they're cribbing about earnings, but the last quarter Nifty earnings is 8.3% growth. First quarter was 4.3, second quarter was 8. The full half year, not full, it's an oxymoron, half year is almost about 6.9% growth. But in the small cap space, last quarter we have seen degrowth. Earnings have been marginally disappointing, not as disappointing, so medium term is okay. Long term, we look at 9 variables, macroeconomic variables. Out of that, 1 is wrong or 1 is red. So long-term teams is good, medium term is okay, short term is safe. So that's what I would say from a market standpoint. Now that this has been the synopsis, if I were a person who has 5-year plus money, if I don't have 70-80% of my money in equity, especially for a mutual fund investor, which is anyways a risk mitigated tool, I would say that I will not be able to beat inflation. So 70-80% in equity is the most important decision, and most people in India don't have that. They is kaan se sunte hain, us kaan se nikal dete.
Feroze, your picks, best large cap funds for 2025 and why?
Yes, my large cap pick is going to be a reasonably offbeat. Quant Large Cap is my pick, because in large cap to generate alpha, you have to be courageous, very courageous. You can't hug the benchmark like a Nifty or a Sensex and expect to generate alpha. The active weights is what is going to give you the alpha. If you're going to mirror the index, now for example, if HDFC is 11% in Nifty, you can't be exactly 11%. Anything more or less is called an active weight. So Quant Large Cap has this strategy of picking up 17, 15, 18 stocks In a large cap portfolio, I don't mind concentrating because it's a liquid counter. You can always in 2 hours get out of any of these top 20, 30 nifty counters. So point one, I would want concentrated bets. I would want high conviction. I would want a smaller scheme so that he can be agile. So it passes that litmus test. And I also want asset management company which believes not just in fundamentals, also gives 20, 30% respect to demand and supply. Markets are demand and supply. A stock could be great on fundamentals. It will be at 20 PE for the next 20 years. And there could be a stock which is at 60 PE at half the great fundamentals. So demand and supply, Quant respects demand and supply. And Sandeep Tandon has been a treasury guy. And I've looked at his models, how he models risk and demand and supply, which is over and above the fundamentals a fund manager should ideally do in a market like that. And Kaustaf Saab is here. We also subscribe to Morningstar. And they give us a lot of information to understand who's the owner of the stock.